All right, Sunday, April 23rd, 2017. All right, going to take a look at the S&P. Currently looking at the S&P futures on a weekly basis here. The green line here is money flow and ADX. ADX tells you if you're trending or not, either up or down. Usually when you get a sideways pattern, it resets, it trades below 20. And then if you're in a trending environment, it heads towards 40. And if you get the ADX to go into the 60s, you have pervasive runner there. The little green dots here are average trading range, ATR trailing stop. I have to mark on here ATR stop. I prefer to use the weeklies because if you look at the bars here, you're still in the game, even if I use moving averages just so I don't have to draw a trend line. And the little chubby McFetso is lazy in his old age, and the little dots here are SAR. Basically, I'm an analyst and I'm paid not to trade for you guys, so that's how that works. So you get a non-biased opinion in there, which means that I won't get caught in bad situation and making it worse kind of I have a non-biased opinion on here. Stochastics on here crossed over around a weekly basis and MACD. I'm not saying that it's a sell-off here, but there's been enough activity since the election that the wrong people, I think, own stocks for right now. We'll look at the internals. Okay, so basically for the bulls, what I'll do is I'll say that this is a bull flag for right now on a weekly basis. What was this SAR stop is at, what does that say, 2200, we'll say. So 2200, so any sell-off I'd probably come down to 2200. Here you can see on election night, did snag through the trailing stop, but since then it's basically worked out. And the SAR got beamed too, so technically you want to be on the short side of things for right now. It's walking. We basically, what do we have here? Here was the high. The day after Trump's non-official, excuse me, speech to Congress. That was the reaction. So we have 1, 2, 3, 4, 5, 6, 7 weeks of selling. Next week will be 8 weeks. That's pretty good. I can count. All right. So anything on the upside, we'll say, what do we have here? 2361 and 2377. And I think this is going to be pivot on here. 2341, 2325, and 2306. And for subscribers, I'll send out a link tonight. I have a function until I think 3 in the afternoon on the West Coast time, so I'll be here hopefully in time for Forex and everything to open up. So I'll probably do the live gig here if I come across anything. So that's on a weekly basis. We go to daily, take a look at the daily. Basically the same thing. The ADX is reset. So there's a trend developing. Anytime you get a sideways market, even though I said I'll treat this as a bull flag, anytime you get a sideways market, that's an awesome thing because a trend breaks out. Like here, you have a large sideways pattern and a trend breaks out. The ADX here has gone up and has not hit 40, and reset. Okay, so basically we're ready to go. Anything underneath, what do we have here? ATR stop here on a daily. So anything under 29, 23, 29, anything under that, run to the hills because the next stop would be your 22. What do we have here? This ATR stop here. 2256. So basically you lose 100 on here. So it'd be 2,300. Well, this is how I'm playing the S&P is every 20 points. So, we're at 40, then 2320, 2300, 2280, 2260, things of that nature when it cracks, because there isn't much in the way of, stopping area. Here's 2150. That was a pause, basically a pause. The happy place on here, I call it a happy place. This is, let's say, weekly, right? Weekly happy place. Weekly happy place. What is that? 2073. All right, that's in the bell curve here for the data that's on the screen. This is both bears and bulls are happy with this price. So right now, bears aren't happy with it being above it. It's market profile, so basically a lot of trading action going on in here. So I treat the bell curve as support. But we're kind of long in the tooth here, and we're running into we raise interest rates to cool down the economy, basically, so the capitalists can buy it up at a discount. Fund it, little people support it, go belly up, and then buy it for 10 cents on the dollar. That's how it works. So we're sputtering along here, but we need to pull out some numbers here. Auto sales, and we're right now. I think we're gonna the interest rates are going to move higher, and the dollar move higher, and commodities restart their secular bear market. Where's the bottom end? Well, I'll deal with that later. Okay, so that's on a daily basis, and on a 4-hour here, just to get a rough idea. Yikes. All right, so what do we have? We're making a series of lower lows. This one failed to do so here. So we got up to above max pain on Friday here. But anything under here, the 20, whatever it is here, 20, 23, 24, 25, there you go. Anything under that run to the hills is kind of a lead in here. Money flow is beginning to come out of the market, and stochastics is on a 4-hour. I'll watch like a 2-hour. I use all data in regards to that. And let's take a look here at, okay. Let's see here. S&Ps, alphabetical order. Okay, NDX, what do we have here? We're talking about S&P, Kev. Move it along, buddy. Nifty, Nikkei, Russia, S&P. Okay, so here's a 2-hour. All right, so we're getting a swing. Okay, yeah. So we have on the S&P on a 2-hour upper range up here is we have R1, R2 an area here. So like I said, for Sunday night, this is going to be a resistance area. Anything under here, it's going to be difficult for the market because it's nowhere. There'll be 8 weeks of selling now. So be careful in that point here. FTSE on here, I wrote down that the FTSE actually hit S2 on the 19th here. So if the Dow or if the S&P decides to go to S2, that'd be roughly 2302 and a half. And then you can see here that there's a little a little wave. What's that? 2270 area. This is on the S&P of probably a chop. I have to believe that a lot of this stuff isn't going to hold here, and we're going to have to come down here, and by then the charts are going to look pretty ugly. So it's very important that the bulls hold this thing together, and we'll just say roughly 23. Well, let's see, here's pivot. So and this is on a daily basis. So banging off against last week's pivot, having difficulties, and you can see here we have unbalanced volumes coming out of here. RSI is stuck at 50, and money flow is here. Okay, you can see what I do is I look for a grouping, like there's a washout here. For me there's like 3 trades on here for since April, over a year. So over a year, I see only 3 trades on here. I try to stay, to me, okay, if you want to day trade and make, $200 a day on one contract, or I start my students at 200 a day, go for 200 a day. If you want to day trade, you have to get up every morning and stalk it, hunt it, kill it, flay it, mount it, whatever. But if you snag a trend, you just stay in there for as long as you can. And here is weekly, and you can see we're pausing here on the some of these moving averages here. And then to follow this up here real quick, let me show you what we have going on. Where's my button? This will work, right? Okay, so what I have going on here is this is the NYA NASDAQ composite, and this is the NASDAQ composite, New York composite. Underneath here is a McClellan summation index. Think of it as, I listed as blood and oxygen. This is the number of issues participating in the rally. So you can see that the number of stocks participating in this rally has been declining. So it's narrow. Basically, the index is in large caps, right? NYA, and here's the comp, basically the same thing. Basically, since the election, bodies are coming out of the NASDAQ, even though it's so. There's two schools here. This either picks up its game and we continue higher, or this is internal divergence. Okay, so you have for subscribers, I'll run through all the others: gold, oil, natty gas, and things of that nature. And have yourself a wonderful Sunday.